Hello, everyone. It's December 29, 2021, and you're watching me, Nikki, for our year-ender outlook. All right, so let's begin. Before we start thinking about 2022, let's review 2021. So I took some pictures of 2021, and these are the ones that remind me of 2021. It's a year when small caps feels like the end of the world. The Doge coins and the S&P 500 were all at the green arrows. You've got all-time high Nasdaqs, and you've got people in the dividend community happily with their Nikes, McDonald's, really doing well this year. You can see as well that the year of 2021 can be described initially with the likes of the memes. You've got initially in the first part of the year, it was really the year of the memes. You've got the AMCs, even the likes of Chinese companies like Futu actually trading even as high as 200 bucks. And Futu started somewhere at about $10 to $20 last year. Of course, it's also a year of AMCs, the Diamond Hands. It was a real year for the GME Club, the Degenerates, the Diamond Apes. You can always see Wall Street bets. So a lot of these have been very it was a strong theme first quarter, and it lasted until the year end. So a lot of memes happened for the year. You have a lot of billionaires going into space. It was a year where we saw Richard Branson's Virgin Galactic hit outer space. You've got SpaceX. You've got AST Space Mobile. You've got Rocket Lab hitting, you've got a lot of space-related names all achieving their missions. Some after 4 attempts, some on 2 attempts. So it was really a huge, it was a huge year for the space community in general. And obviously CZ with his owl, you could see the NFTs, you can see crypto communities all hitting, well, it's not at all-time highs this year, but basically for this year, every crypto in general, at least in the top 10, hit great heights. And you've got a lot of people in general who invested very early on to be happy with their crypto communities and their crypto holdings. It was a year wherein Elon Musk was, a lot of people in the crypto community already considered him as God, or even the stock community. Wall Street bets really loves Elon Musk, Tesla. And of course, you've got Alex Karp of Palantir, also a well-loved stock of a lot of the Wall Street bets community. You could see that in the first part of the year, some of our clients, based on unrealized P&L, was able to recoup losses in the Philippine market in just 3 months of joining. Thank you so much. So that was really what you'd see in like the first 2 months actually of the year. You'd see memes like these when this employee invested in Dogecoin, gets a really huge move, knock knock bitches. You could see a lot of memes happening. It was happening in Nokia, in AMC, in BlackBerry, GMEs. You could see that a portfolio that usually had a lot of small caps. Look at this. This is from Dragon Tail Systems in Australia, ACTC, which was a SPAC, which ended up becoming, I don't even know what ACTC is today. I think we were guessing during that time that it was going to be Proterra. It didn't turn out to be Proterra. Indeed, even though it was still up 248%. Look at these types of games. Copen hit 100% within just a month, from $2 to $4. This went on to as much as $12, $13. You've got Razer, Rush ended up becoming Pure Cycle Technologies. You could see most of the SPACs hitting 60%, 100%, ACTCU 138. I think ACTC was the Proterra. Yeah, Proterra SPAC. Then these are actually penny stocks already. GMEV and GRSO hitting 100% moves. Chinese companies in the car industry, it was like XPEV hitting 26% here from 44, hitting near 60s and 70s all the way. New technologies hitting as high as about from 32, hitting 40%. These are the type of gains that you'd see for the first month of the year, about January, February. And this went on. You could see from small companies to even smaller companies. So I'm just going to read to you the things that are 100% up in just a single month. No, you've got the Copen, OAC, which was HIMS, Stratasys, ACTCU, XPeng, TPGY, which is EV Box, Roche, which is, as I said, PCT, CRJ, which is Creepy Jar in Poland, SSPK, which ended up being Weed Maps. So before it became Weed Maps, you could all see the call options hit 100% moves, 55% on the stock, Avan, which was on SPAC. In general, just owning a lot of mergers and SPACs became like 50 to 100% for your port. And it was like all over, from the $400,000 to the, you could see a lot of these accounts just sharing snapshots all throughout. And this year, we also saw people and taught them how to essentially take advantage even on the shorts. So you'll notice in a day when everything crashed on the growth stocks, 8% down, 9% down, 8% down, we were short the Trade Desk, eHang, Enphase, Pubmatic, Digital Turbine, Blink, Grow Generation, Danimer, BNGO. In truth, shorting this much and holding it all the way down, because we caught the actual high, the peak of the year, which was about February and March, that would have been super bonanza. Like, not only would these gains be greater, but it would have been greatest. And a lot of some of our clients were so happy learning how to short when we taught them how to short this year. I mean, look, my daughter learned how to short sell, and how young. I think she was like, I don't know how young she is, but she is young. And even them, they were happy because for I think this is just less than 12 years old children. So we were teaching even the parents to teach their children how to engage in the markets, and also to learn the two sides of the coin, which is also to learn how to short. So most of these negative drops of the market was taken advantage through shorting. So it was introduced early upon. These were actually snapshots of seeing you make money on the upside on these SPACs, and then eventually you short them as well, knowing that they're not going to be profitable. So you could see all of these P&Ls were really strong, like $10,000 on an XPeng position, $74,000 on an XPeng. And it went on. Like, there will be days wherein for a $400,000 account, it would be up $40,000 in a day. This is in a day. And you could see like changes in percentage, 28% up on INQDs, 27% up on LCTX, 20% up on RAC. These are all like small caps, micro caps, now Dimension, NEO, XPEV. So I believe that, so like they were strongly up. And during this time, I think we were shorting already these great names. That's why unrealized P&L. So during the strong run-ups of these names, we were also trying to short. So that's why there is these strong moves, and we were like shorting it. That's why then the P&Ls were actually doing well when the markets eventually collapsed. These are the types of ports I would see people sending, sharing. Mostly like a lot of greens. You could see like unrealized P&Ls were a lot of greens, no matter if it was a small port or not. And some will say, sinagad ko na yung margin ko, and things like that. Of course, 2021 also saw memes like these. Noah's Ark, aka Cathy Wood's Ark, sinking. It was a prediction starting February, because February and March, people were shorting growth stocks. And the highest target would be ARK. So we were shorting actually the more ridiculous SPACs. Let's go through the class videos, January till December, and let's just read through the titles. So January 19, we were discussing, well, since the market sentiment was great, you could see that we had to discuss all the innovative and non-profitable names, whether that be discussing IPOs. There were the IPOs, Deliveroo, PUBG, Grab. PUBG was supposed to list through the Korean company. Drones were being explained, unmanned aerial vehicles, UAVs, drones, e-commerce, the last mile delivery. We had a topic on esports, which is a nascent industry. You could see that it's just early on in this esports category. So mostly we were discussing retarded markets with a lot of with a lot of sectors that are unprofitable yet. So the next frontier for the manufacturing industry, which is the fourth industrial revolution, additive manufacturing. Ready Player One, we were discussing robotics, industrial automation, holograms, extended reality, the metaverse, basically Player One. And of course, retarded markets and extensions. We also discussed why it's extended and we call the market retarded, to be aware that despite all of these strong moves, you have to be understanding that strong extensions would mean also large drops. And also we discussed a lot of eVTOLs, a lot of Wall Street bets against establishment. It was very strong in January. So in January, we talked a lot about SPACs. You could see we discussed LiDARs like Ouster, a lot of solar-focused SPACs, which didn't have a company yet then. It was still searching. So eventually, we knew that these names ended up becoming Lion Electric, Lilium, so Solar Max. So a lot of like sustainability EV-focused SPACs, which would hit about 100% in just a single week if you invest or buy and speculate and then sell it after 100%. Sometimes it goes higher, but usually 100% we exit. So discussions about, as far and wide already, because you've got so much liquidity in the markets that you would go to as far as education technology firms, as far as this is Norway. So like Kahoot, I think it's a Norwegian name. Yeah, and then we talked about SPACs, wind turbine to add into the category of renewable energy. As in 2020, the biggest energy firms were mostly solar, but we also knew that wind-related names were getting a lot of money flow. So Chamath had become the king. He was called the king of SPACs. We discussed about his telemedicine play, which was Clover Health, and our strategies. In February, we were still, could see February, we started with even discussing penny stocks, biotech watch lists, constructing portfolios, ideas on genomics, on Bitcoin, deep learning, about even the likes of real estate, indoor solutions like Agrify, American Battery Metals, all these batteries. Sometimes I wouldn't know about the topic, so we'll use technical analysis to find winners. And literally, we were saying going FOMO over biogenomics. So understanding these small companies like biomass plays, even the likes of longevity names, even the names of like Humacyte, which is really about addressing regenerative medicine, blockchains being explained. So, about February, we also discussed, hey, how low can we go? What would be our playbook if there will be crash moves and so on? So around March, starting March though, you would see changes in our titles. March 4, we would be talking about a rewind of high conviction stocks, unconventional truths about Awesome10X long-term investing. Around March 8, we then said, keep on selling extensions. Do not be blind, know the supports. So around that time, we were talking about retarded markets, what do you do there? In fact, here on March 12, we gave a very bearish call amongst a very strong market. And this was highly controversial then. What to do in retarded markets, a bearish divergence, extension, pigs get slaughtered. March 12, we decided to go all out, nuke. And this was the very controversial call. March 15, the nuke call. The markets are on crack and the NFT frenzy. And we then went on with how to make money in a market crash, a choppy market. Because we became so bearish, we taught people how to short. On March 18, our title was How to Profit from a Market Crash and a Potential Peak in 2021. So I think it was obvious for everyone that February is the peak. We were very much aware it was the peak. So all throughout, we were just teaching people, yeah, you learn about these names and you have to learn how to sell put options if you want to get a winner and get huge yields. Because during this time, the put options were also high yields. So you couldn't actually just buy a put. So you want to sell companies, you want to short, but at the same time, you were also aware that there was still a lot of froth. So there's a lot of companies that we were long, and we also gave the ugly zeros, which was really the antithesis of Awesome10X. If Awesome10X were companies that would 10X, the ugly zeros represented a category of shorting. The companies we felt were going to go zeros. And then, of course, when the markets eventually dropped, you could see from March all the way to end of March, it was very quick. A lot of stocks crashed really huge. That by March 26, we started giving 50% below peaks. Is it time to cost average some great winners? And then we talked about the long-term opportunities in some tech recs, like Chinese tech recs, and the all-you-can-eat buffet. Actually, during that March era, there was really a huge move from March until April and May. You'll see later in the charts. So we caught the lows on March, and then around April, these are our topics. I'll just read to you the topics. We wanted to discuss everything about artificial intelligence. We were understanding what an internet bubble was and the similarities to today's market, seeing that there were extensions during March and April, that it was going to be higher, but then it's going to be lower. So there was thinking in our view that there was a peak. So you have to be understanding that, okay, it's going to be a choppy market. Market crash, choppy market. Understand it's choppy, not all-time highs. So around April, March, we're already in that mood. Okay, so April, we still discuss about great topics. Alentier's connection to Lilium, all these things about eVTOL so that people understand what the eVTOL category was. Then, of course, we were discussing about additive manufacturing, deep dive on nano dimension. We talked about how do you work from home, discarding Awesome10X for the people who are interested to learn the Awesome10X portfolio construction. And then, obviously, you could see a lot of companies were getting hit. So we're looking at Alibaba, NVIDIA, Grab, which is going to do a SPAC theme for the year, the internet categories, green and silver. This is really about solar and silver per se. Some penny stocks were discussed. And then, of course, we were also saying, you know, are you really late in shorting or selling? Around April 21, when the markets were climbing up, we also said, okay, there are companies that you can actually short. So it was really more of, there are companies that you would short, and yet there are companies that we would want to learn more about. So there were topics about Pinterest, studying Pinterest. So April and May, you'd see a mixed bag. There are companies we want to short. There are companies that we also noticed people were actually buying real estates, as in, so we discussed things like Zillow, KB Homes, you know, companies that are just understanding how these money flow was going through real estate. Around May, there were questions. So around May, we can start seeing that we studied about Morgan Housel's psychology of money. Here I discussed about how somebody who was a janitor ended up earning $8 million and how to be like him. So this was more of foundational strategies, accepting volatility as admission fees to Awesome10X. How do you navigate a bottomless pit? Around May 7, we gave a call that Christmas came early in May. So we discussed how buying some sell-offs during May will end up doing well. So we caught that March drop, and then there was a reset, a double bottom reset around May. So March it dropped, the bottom, short-term bottom, rallied on April, bottomed again on May, and then rallied again all the way to June. So we got it all, actually, from Feb to March to April to May. That's why actually during June, I myself, my Awesome10X port actually hit all-time highs, not on Feb peak, but June 28th, because we were able to short, to go long, and so forth. So you could see that we never actually stopped learning about companies. And we talked about Chinese domestic demand, JD, Pintuatuo, which were the assets that appreciated for decades. So we were seeing there were short-term drops, but also there are also long-term companies getting killed. And what do we want to do with some long-term companies getting killed? We want to learn about them before we give a buy reco on them. We have to learn more. So it was more of foundational classes for people to understand what JD does and what it's done, what companies like Pintuoto has done over the last 5 years. And during that time, we also gave a call that we felt, is the market rally sustainable? Do we believe that the SPAC winter is thawing? And during that time, we wanted to rebalance, right? So early on, because during the early parts of May, we were giving a call that the bottoming out process has begun, a broader understanding of the market sell-off, guides to tips, tricks, and strategies in the market crashes. We were able to navigate April and May quite actually very well. And during that time in May, there was also the release of IPOs. So the release of IPOs would often get more liquidity in the system. So it wasn't really an easy thing for other people who were trying to short. So there were also squeezes happening all throughout. That's why we discussed that anatomy of a short squeeze. These are some of the topics that I prefer people who wants to rewind their ear to rewatch because these are very important topics. 2021 is a year where you learn a lot about market strategies because it's a year where it's been choppy. This was a very good class, how to handle strategies in market crashes. So you could see the tone in the titles that we talk about the volatility a lot. And do we want to justify the valuation of coin? This was actually saying to them that we didn't actually believe in Coinbase, the valuation, so we avoided it. Okay, so I think like Coinbase started at 400 and then fell all the way to about 200 bucks. And then right now it's trading from about 280 to 300. Because I really do not see valuation of Coinbase trading 400 or 300. Every time Coinbase would rally up, we're gonna be shorting. So actually recent peak again of Coinbase was about 380 or 360. We started giving another short call. Of course, it will be covered around 220 by a lot of people who believe in crypto, but still, our short view on Coinbase is actually still there. Because between crypto exchanges, we would prefer other names than Coinbase, specifically Binance. So I'm more of a Binance baby than Coinbase. Okay, starting June, we could see that the markets were still squeezing a lot. And you could see starting June, from about June 1 to June 11, look at the titles. Oatly IPO from Challenger to Global caught following. Markets were still releasing a lot of IPOs. And not all companies were actually able to rally. So there were still a lot of oversold opportunities. There was still a short squeeze. There was still meme mania. You could even see some space warrants and biotech names, some Bidenomics. To be honest, all this led to an all-time high at the end of the month, actually. Because all of these details were very trading oriented. In fact, around June 10, we also said meme stock frenzy could be curtailed because of GME dilution sales and SEC warnings. So this was a year where you could even see the GMEs and AMCs, because they were sky high, the owners were obviously raking in the money, taking it out, getting cash. And if they want to take it out, there will be squeezes first before it eventually collapses. So there were stocks that are rocketing to the moon. And during this time, actually, there were memes like Ashford. And I had a question, should we sell stocks that are going into all-time highs? NASDAQ 14,000, S&P 42, Dow 35,000. So we were aware that the market was extended. So should we sell? And we had this one. The title in June 21 was Flying Pigs, 360. So flying pigs means that in Wall Street, greedy pigs get slaughtered. So when flying pigs, it's actually a very bearish market call. That title is very bearish. So we did talk about selected sectors are meant to be traded, which means that they had to be sold. SPACs, memes, weeds, healthcare, drones, eVTOLs, and warrants. This was being given a sell call. Now, of course, we had to give updates about what's happening in the industry of esports betting. How would I invest today on a model portfolio was discussed on June 24. And unfortunately, we saw during June that the Chinese stocks were just really so valuable that we gave an asymmetric upside. Of course, this proved to be wrong. This was one of our biggest mistakes, which we had to eventually cut. This getting early on Chinese stocks around June, after about a 50% sell-off, getting in on Alibaba, say $220 or $200, would end up very early. So eventually we had to close those positions in wrongs. But investing in truths, nothing beats homework, was really a talk about what happens long term of a company that actually has good funda. So some were just updates about upcoming SPACs. So we discussed the Ginkgo Bioworks before it became DNA. So this was SRNG, Soaring Eagle. Well, this was actually a powerful company, just like any other SPAC. During June, there were still IPOs and SPACs going out. So even if you're bearish, to be honest, the market wasn't going to be conducive for you to get bearish early, because there will always be squeezes. So you could see that the market in the first half had a lot of froth. It was obvious from the titles. But we were also aware that it's going to be choppy. It's not going to be a straight line down. Around July, these are the topics. July 2, 1, you could see that we were still featuring some SPACs just to get to know what's happening in some of what we felt were going to be a popular SPAC. So other than the DNA Ginkgo Bioworks, it was GXGX, or the Cellularity SPAC, which was about stem cell research, cell-based therapies. And we also now discussed, how do you sell calls? How do you manage a drawdown if you wanted a company, and that was a point like in Chinese companies like Alibaba, what if it was wrong? So around July, we're teaching people, how do you sell call options on your Alibabas or Chinese companies? Around July, we were very much into helping people how to learn options. So these were beginner classes about option Greeks, how to handle a drawdown, teaching people to do call options, selling calls. We never stopped teaching people the fundamentals of some companies which we felt were worth mentioning. So we still discussed Heliogen, the Sunlight Refinery, what are the 3D bioprinting companies, just to understand, and we knew that these were speculative. So these weren't coverages to tell people to buy, but really to learn what's happening, because Awesome10X Trends, you want to just be early and learn about it. It could be a 10-year-old technology that will ripen. So 2021 might be too early for bioprinting or stem cell research, but it was still worth learning. Because the thing about Awesome10X is that we want to learn. Learning doesn't need that you need to apply it and buy it firsthand. I myself never really bought any of these Organovo or CellLink or the Cellularity SPAC, but I was interested to learn, hey, what's happening there? Because I wanted to give value to people who would never cover it, and so we talked about these. We gave chart attacks, and we said, how do you deal with bad nights? Expect it. So around July, we're already expecting the markets probably will be bearish. And so the bear show was released. 15,000 NASDAQ, peak everything. So the inverse charts will show your true bias. Around these times, you could see July 16, 19. We were very bearish, suggesting shorting, selling, trimming, and so on. So around July 20, all the way to about July 31, you could see we talked about the flight to safe havens. These were stacks the apples. So we saw some companies like SentinelOne, cybersecurity names mostly, were being safe haven. So we actually invented a term called stacks the apples. So these were mostly SaaS names. CrowdStrikes, Datadogs. During this time, DocuSign was actually a safe haven during July. And, there were also discussions about, do you want to trade given how choppy the market is, or do you just want to have a portfolio management design? So what do you make of Chinese stock sell-off? Another crazy day for Chinese stocks. July 28, we felt that bottoms would happen if people give up buying. And so during this time, we were reading a lot on earnings and updates. So are we going to buy the Amazon dip? Are we going to update ourselves with Palantir, Qualcomm? And these are great companies that had great numbers during July. So Palantir, Qualcomm, QuantumScape, NIO, Geely Auto, Laser, Ford. Eventually we were just really understanding the earnings format of these companies that update. It's really an update of companies that we liked. And working from home, making money with global investing is really more of a summary of Awesome 10X ethos: portfolio design, construct. How do you make a portfolio that you can sleep well at night if you had a choppy market? Because in August, we were already saying the market is tricky. You've got the China tech crackdown, you've got SPACs selling off. And yet, we also, of course, wanted to feature companies that, hey, it's actually doing well. The Square's results, the things about the metaverse, even as early as August and January, actually since about last year, we were discussing metaverse picks. So we wanted to feature even great companies like Electronic Arts. So you'll notice that if the company is doing well, we would feature them no matter the market sentiment. So Upstart was given a buy rating, PayPal doing well. Around this time, we also noticed there are companies that had really bad numbers, like Beyond Meat and Unity then. I actually made a contrarian call on Unity, even if it was bad numbers, or in August. We could see that we were also telling people to rebalance your portfolios. You want to cut your losers, you want to shift winners, because you could separate the boys from the men, because there were winners and there were losers. You want to be good riddance for the losers. So where was the money amidst uncertainty? We talked about the fact that there are companies that are affordable clean energies like Sunrun. We felt that there was indiscriminate SPAC sell-off on some companies like Teladoc, Alibaba, ChargePoint, Laser, HIMS. And then we also talked about large caps we actually like to dollar cost average. And how do you survive a falling stock market? Definitely there were consumer cyclicals in focus. Around August, we discussed consumer cyclicals, which are really, when you say consumer cyclicals, these are retail names, apparel names. So these are cyclical because we've been noticing, hey, there seems to be a lot of outperformance with some of these consumer cyclical stocks. Now, of course, we also gave market strategies. What do you do on August 24? Sell calls. Sell calls means you're still shorting. And then bargain hunting. So while you're selling calls, you're also positioning to bargain hunt a company. And then we felt that there are companies that are lottery call options and strong leaders. And we also discussed, the Axie craze, the play to earn economies, all of these blockchain games. And we never fell short of featuring great earnings companies. So when Sweet Indulgence Donut, aka Krispy Kreme, had a very great company update, even in August, when the entire market was bearish, we still made it a point to feature Krispy Kreme on a company deep dive. So there are companies and cryptos we discussed, like Chainlink, or in September, that's when we discussed Chainlink, Aurora, Solana. We talked about Matic, aka Polygon. This was Ethereum, the top scaling solution. Talked about, it will be a falling knife if you catch on your own risk. So there were updates about the market that during September, it was still too early to bottom fish. So we talked about weakness persisting even on September. We talked about the difference of what's strong and weak charts, checking year-to-date trades. You're buying the Bitcoin dips. You're going through passive income through crypto staking. And as I said, we never felt wrong about featuring great earnings companies. That's why Zoom, during the platform of hybrid workplay on earnings updates, was featured as a company deep dive. And some Chinese rebounders. Around October, you'll notice that, as I said, we feature companies we believe upon on a secular manner. So Stardot was getting featured through a SPAC, which was Oxus. It was an ultra-fast charging battery. So these are technologies that are innovative, so we wanted to feature them. Whether it be Heliogen or Stardot, we never purchased it in our portfolios, but it was worth reading about it, or at least learning about the company. So around October, we saw, you have to have some relief rallies, so some actionable ideas. There were the Facebook controversies, the impact to the NASDAQ, how do we build the metaverse, should we invest in the likes of Twitter? So we even discussed nuclear energy, how do you end up, learning about the sector on uranium, why does it matter? Portfolio management, again, on monopolies and trillions. The market of apes, basically, the Harambe effect. And how about the commodities and energy? Is it a secular boom? So most of our themes, you could clearly see it on the title itself, that while the market was red and the market was bearish, we still kept on insisting and discussing companies that had a really good future. Because if you fail to read about what metaverse plans are on Facebook and what these companies are doing, whether it be Nvidia, Qualcomm, Facebook, Tencent, Unity, Copenhagen, you would just go with the headlines. So these were more deep dives about it. November, you could see around the first part of November, it was still, we were noticing that some of the SPAC winter is towing again. So there was evidence of pent-up demand, consumer cyclicals in focus. During this time, every retail name was just doing well, whether it be Ross Stores, whether it be Dollar Tree. Most of the consumer cyclicals were really doing very well, which was evidence of pent-up demand. So there was strong sales on the likes of Victoria's Secret. There was strong sales on the likes of Under Armour, Nike. So there was strong pent-up demand. Consumer cyclicals, including your Booking Holdings, Expedia, Airbnb, and so forth. So we also defined why Zuckerberg's metaverse wins. This cannabis buy ended up becoming a trade. And we were very clear that it was about the legalization of marijuana and medical cannabinoids. But in the end, it fizzled out. So it was actually a buy that it was a quick sell as well. Then global market updates on the Singles Day sales, how NVIDIA is moving in the metaverse. So a lot of foundational platforms. You'll see that we kept on reiterating metaverse plays and how you utilize options yet again. Every time the market's crashing, if you hear me talk about options, you know that I'm recommending shorts. So November 18, we were giving people options, how to short. How do you a technique on options? Markets crashing, should you nuke? You want to give short the markets, November 23. So that was a clear short the markets, utilize the options for risk management, and then reiterate more shorts, review of the bearish scenario. So around November, we just kept on insisting on the metaverse as a safe haven and shorting the markets. December, the end of the month, okay. So you'll notice starting December, we were still shorting. We talked about the great fade away. Why I'm shorting reopening, more Chinese EVs, SPACs, and it's not too late to short, in my honest opinion. That was December 3. So some people, because we kept on reiterating on November to short, some of them are wondering whether December was still okay to short. And all that throughout, we remained short. The Omicron variant remained bearish. Stock and crypto price will continue lower. We remain short with tactical longs, tactical meaning trading longs, and more bearish short. And here, objectively speaking, remain short the highly speculative risky assets. And the opaque portfolio was really about consumer defensives, consumer staples. We saw the people just hiding in Walmart, Unilever, Procter & Gamble, Pepsi, Coca-Cola. And we said, it's not yet time to bargain hunt. Continue your shorts. Even the generals will fall. So eventually we felt that Apple, Qualcomm, there's a likelihood that they'll fall. So starting December 15, we're already giving bear market ideas for 2022. With questions on, are growth stocks dead? What is not yet priced in if Apple succumbs to the sell-off? Is it also concentrated spam game, overcrowded sardines? And you'll see how to sell options to take advantage of market volatility. And around December 2021, if you're still there, we mentioned December 2021, the last thing is the short strangle technique. The short strangle technique is the technique where you're doing a neutral strategy. You're shorting via high yields taken from your put options and the high yields that you can also get from the call options. This was a unique thing because Moderna, the vaccine stocks were being discussed here as a short strangle strategy, simply because there will always be fighters trying to buy Moderna and Novavax. So the call options would be so huge. Selling the calls and selling the puts, both would have made money. Both call and put options were like giving 20% yields. So 2021 was the year of consumer defensives, discount stores, household and personal products. When you talk about discount stores, wait up, there's something that is, there's a sound. How do I turn off that sound? Wait up. Okay, either way, all right, let's proceed. So 2021 was a year of consumer defensives, discount stores, household and personal beverages, confectioners. You've got strength persisting in the end from Walmart, Costco, Dollar General, P&G, Unilever, Colgate Palmolive, Coca-Cola, Pepsi, Hershey's, Mondelez. And you can also see that all trends end at some point. The tops are obvious only in hindsight. So everyone knew that February, the market crashed, we gave a new call in March. But around April, May, June, July, you can only see choppiness. So financial market stability is much less obvious, perhaps even non-existent, because you are playing with people and they keep changing their rules. You can only control yourself and your exposure, that's all. The reason why shorting was not a straight line down was because Fed was going to continue printing money. The end started, or the actual end of the trend would start somewhere about November when we gave more bearish calls. So if you'll notice, our short calls were very clear around Feb, March, around July, even on August, and then around November and still on December. So it was really a month or a year where a lot of choppiness was happening. And the thing about coming into 2022, you have the following risks. Rich valuations against execution risks. Long-term growth is intact, yes, but it's possible that 2025 and 2026 targets have been paid in advance, even under current prices. So your thoughts and my thoughts on FANGs are that you have a lot of execution risks. Risks of competition, margin erosion, market share losses. Aside from the fact that, yes, there's these interest rate hikes that are real already and priced in. So there are companies that have it priced in, and there are companies that are not priced in. Say, example, Apple. People are paying what? 40 times multiple on 1 to 2% flattish growth. These are the types of names that you have to think about if you're hiding on an Apple. And as we also think, you know, a lot of art names we know sunk too big this year. And companies like Tesla could obviously fall from 1112 to about 900 or 600. But also the same thing is happening. There is interesting things happening on Teladoc, Roku, and Zoom that's very different from a Coinbase. So to me, like shorting a Coinbase is normal, but shorting Palantir at 19, I'm not sure. So I personally will not argue about people screaming that the market's still frothy, because there will be a lot of competition. Like, for instance, if you're looking at the Chinese EVs and why we still gave our shorts on Lucid, Rivian, Neo Xpeng, Li Auto, it's because there's just too much competition. And Tesla's also going to compete with them even on that front. So you just have a lot of things to ask for yourself. Are the prices today priced 2025? And therefore, should they drop more than 50%? And our answer is yes, you've got a lot of short ideas. That's why if you go back to our what to do bear market 2022 ideas, I would suggest that everyone who's an Awesome10X member to go back to those and reflect those classes. Those are our ideas. And we gave it already, the bear market ideas for 2022. So despite the fact that we are thinking of shorting something, we are also preferring to buy other things. So for instance, in our view, we simply prefer Square versus Coinbase. So you could be long Square and short Coinbase. That's like the thinking. Because in my view, for instance, Block, Square, nowadays it's at about $168 or $150. Assuming the market will throw it over and over, the view that we have is that you just want to sell calls at 200 above, but also sell puts 100 to 140 below. So it's a quite huge trading range. You could sell calls and you could sell puts. That's the short strangle strategy. I would suggest that people would have to learn these strategies for 2022. Short strangles and short strangles which is neutral, but also, taking advantage of the yields. A lot of premiums right now on the yields. So why am I not as bearish on Square? Because Square, as we said, was a hybrid of many businesses. The seller business, the cash app, the gross profit grows. Over the last 5 years, it grew 37% CAGR to about $2.7 billion. Lots of runway. And they grew from nothing in 2015 to as much as $1.2 billion of gross profit last year. Has a lot of competitive force to fight Coinbase at its own game. Digital wallets, gift your Bitcoins to your friends, stock trading, direct deposits. These are all relatively new products launched. I still believe that Square as an ecosystem hasn't fully been played out or priced in. So sometimes I would say the lower it goes, the better for you. You want to be selling puts on the downside and selling calls on the upside. That's what the view is for Square. And if you're looking for a short idea, as I said, you want to sell calls for Coinbase. Ever since Coinbase got listed, we're all avoid. So from the start to the finish, yeah, we saw those triple bottoms here about 220. But eventually, I do think that, 220 is going to be broken this 2022. You're going to see all-time lows for Coinbase, I think, for next year. Either it breaks $200 or not, but simply put, you can sell out of the money calls at 320. If you can take a 5 to 10% yield for January or February 2022, do it all the way for the year. And then if the put options become really cheap, by then, if it rallies, then you want to buy those puts. So you want to sell calls and buy puts because we are very bearish Coinbase. So a lot of my ideas for 2022 is really, showing you ideas as well that were shared all throughout the year. I'm going to share to you my favorite classes for the year. Let's start off with this class. Try to review this again. March 18, around 2021, this was a topic which we also shared to other people. How to profit from a market crash, the potential peak in 2021. I gave this class for Lady Traders Confessions. So that's why it's March 18 and March 20. I gave it also to them. And I talked about a nightmare on Wall Street. So I also said, during that time, actually, we were shorting. So when Jay Powell said that they're going to continue the liquidity, inflation was transitory, we had to cover. So we were actually bearish, but we had to cover. That was March. I talked about the market as lipsticks on a pig, meaning it's just a superficial change to this guy's a fundamental failure. There's a lot of failures in the market. I do believe that there's a market bubble. Buffett's right-hand man says Wall Street is showing a bubble sign February. We talked about these things. Be careful what we wish for, the current global conditions, roaring 20s, the end of a pandemic. So there's really a lot of similarities with the 1929, the Great Depression. There are companies, in my view, that still would have a difficulty. So Marriott Hotels, Plug Power, we gave a short, $74. Until it goes $22 or $11, still a short. Every time it would rally, we still gave a short. $50 packs to the ground. Every time we saw $50 pack, may it be Playboy or QuantumScape during that time, 130, even at 70 or 50, we just were recommending more shorts, downside of about 30 to 50%. Eventually, this was right because QuantumScape now is about $20. SPACs at $50, 60, 30, or 40, we want to sell them because this was also our view. The SPAC bubble is about to burst. And true enough, around the second half of the year, these were proven right. This hasn't been proven yet. So we felt that commercial property investors would have a problem. You've got empty office buildings. It's as we felt that the shift to remote work was not just a temporary thing. So there will be more bankruptcies. It would damage the economy. restaurants, some restaurants will be bankrupt for real. And our view was, you've got empty offices, maybe ghost malls, some mass layoffs, defaults, retail apocalypse. What were we wrong about? We're wrong about this one. So far, we're not right that there is a death of office properties. In fact, office properties continue to stay. So this was a call that we felt was right, but so far not yet right. Not yet right on that. We felt that there will be delinquencies happening on commercial real estate debts. That never happened. So BXP, ARE, SLG, these haven't been sold down. Although the short hotels call wasn't also that profitable yet. So our reason was e-commerce is here to stay. Therefore, long run, the malls will go down. The shift to remote work means that long run, offices will go down. So that's why we were all bullish when Zoom Video fell down. So Zoom Video at $180, we're buying it actually, as we believe in the remote work trend as secular. Death to traditional hotels and the shift to Airbnb. So Airbnb is right now very highly expensive. But should Airbnb fall 130 and 140, which it did this year, we bought it. So we gave a sell when it hit 200, 180 because Omicron. But if Airbnb fell 130 to 140, we would probably be buying back. So I'm more of a buyer on the likes of Airbnb and Zoom Video, long-term, and e-commerce names. So the drop right now, C Limited, of e-commerce names like Kupang, I'd say, yeah, sure, some people would actually buy it. If Shopify fell, e-commerce name, I'd love to get in. So office landlords, a short on what we felt on those real estate office REITs hasn't happened yet. We also felt that the market would go through stages: the denial stage, anger stage, bargaining stage, depression stage, acceptance stage. So even when we felt that the market was stoppish, the market would go into depression over a few 5 stages. So we know that shorting March, April, or February, March, April, it was okay to nuke because the market's going to have a huge downside. Nowadays, on December, I'd say that we are more in the depression or acceptance stage. The market is actually, some of them have actually, in my view, went maximum pain. So the acceptance stage is about maximum loss stage. Supposedly, this is when you'll cover your shorts and you would go long the markets. So around, that's why for Taladoc or for Zoom Video, we caught the extended moves of Zoom Video at about 400, 500. But this drop of about $180, if you try to short 400 plus or $500 for Zoom, I think actually it's more of a long already for Taladoc and Zoom. So the stages of grief, we talked about them. You know, around March, this was more of a harder pitch because a lot of people are so bullish. It's very difficult to give them the nuke call, but we did. So, and these were the companies, the properties that we thought would have a problem. So Boston Properties, traveling stocks we felt would be a flight to hell. So airlines, if it rallied, we felt also a big mistake for some renewable energies like fuel cells and plug power. We gave a good short calls on them. It would be shorted at 48, you'd cover at 39, but then again, I said it's going to be a $20 name. Plug power, I think right now is $20. Optimism on airlines, we felt United Airlines would be shorted. Yeah, so if it rallied, recovery demand eventually would fade it away. So we have a fade away play on recovery demand. Now, this was an early buy for us, Alibaba. We felt that $200 was buy. Eventually had to cut this, but eventually right now, we are still going long Alibaba at 100 to 120. So I would buy favorite compounders. We would buy favorite compounders like C Limited. So when C Limited dropped at about $200 or 190, we're a buyer there. Eventually, this dropped at $200. That's why we will buy it. We wanted to buy CrowdStrike. CrowdStrike rallied. If we picked it about 170 to 150 during April and March, actually around this December, if CrowdStrike does fall there, it's still a buy for us. CrowdStrike, I think, is $200 now. So there are companies that we are willing to buy. So CrowdStrike. Now, we said as well that Disney teaches you a lot about trading and investing. There was a company, a simple lesson by Disney was you don't get scared of monsters, you actually befriend them. We wanted to teach this because we knew that the market was a monster. So you need to know how to short. But despite all of that, you also want to go along some great quality companies like Disney. So Zoom Video, there would be have supports at 290, 235, 200, 180. Eventually, the real drop happened at 180. So I really think that Zoom Video at about 180 is already near the bottom. So I got in Zoom Video at about 180. We were willing to buy Tencent. Of course, these Chinese sell-offs gives you a lot of ideas to buy more Tencents at lower levels. So yeah, at current levels of Tencent, about 450 Hong Kong is about $50, $60 for Tencent. We're good on the Tencent long term. Chinese companies, we shorted this eventually, no? So yeah, so eventually we had to close all of our Chinese companies. Yeah, but we gave until today we're actually looking on companies that we like. So when Roku finally sold off, you could see that these were sold off. Roku I sold at about 330, tried to get in at 360, I closed it at 330, and then I waited for the fall. So about $200 Roku right now, I went back in 210. So 40-50% lower for Roku, we're in. Twitter, we felt had momentum and value. I like the trajectory. Nowadays, Twitter is about $34. So actually, I'd love to get in. So I would want to buy the crash. So because the market was choppy, I would always buy something that I like and then end up selling it and then buying it back. So I don't change my view. So for Twitter, even at $34, obviously that's a better buy. Spotify, as low as $200, that would a buy. That would be given a buy. Snapchat, you know, during this time, you could see that there's a lot of sell-offs, right? So we were at $60, $64. We were waiting for it to fall to $50. Nowadays, you can buy Snapchat for as low as $34, even cheaper. So some companies, because of this changes in Apple policies, allows you to get some great social media companies at a very good entry point. So most of the time, well, this one had a change on theme simply because of the debt, no? So the HBO Max. So yeah, the movies was the reason. All Chinese companies we had to close. But right now, most Chinese companies are like 80% down from the peaks. Like you can get data right now for about $14, knowing that Walmart got in at about 21. So like that's like, you're getting it 30, 40, 50% cheaper than Walmart. So, and then we had to define companies, people, investors, as whether are they an ostrich, the one who would just suffer from a confirmation bias, they'd only listen to themselves, or are you a sheep just listening to the herd? Are you a pig that's going to get slaughtered? Are you a chicken who's too afraid to trigger? Are you a tortoise doing cost averaging? Are you a rabbit doing fast money trades? Snail, also cost averaging, or actually a snail is more of like money market funds, a bear, and so on. There's a lot of scary people in the world, snake men. And I also gave an idea that cryptocurrencies for 2022, especially the miners, are given shorts. Actually, the miners and the vaccine names. The strong moves of crypto are great. It's just that you have to also ask yourself, all trends would end at some point. Possibly there will be a lot of dramatic pictures of cryptocurrencies in the future, given that this was what happened. Ethereum started here in March 2020. You have to know where it began. BTC at about 5,000, Ethereum at 100. Now BTC is what, 50,000, went to as high as 60, 90, 70,000. So there are companies, BNB $11, now it's about 550, 50x. Think like for anyone with $1,000, if your money's like $50,000, you'd end up having to think the dramatic greens are also going to be taken profits from. So I think like there's an old saying, you want to fish where the fish are. And I think like for 2022, the big ideas would be a lot of people who are already afraid to buy would end up having to think to buy back great companies, right? So for now, in fairness, I am teaching people to do some puts. But during that time on March, I thought about, hey, what if I want to buy Netflix, some Zoom, some Roblox, and Tencent? potentially some Teslas at better entries. So I guess for 2022, if you want to do some put selling on companies that you really like and buy puts for companies you don't like. So I'd end the topic with people going through my favorite classes. Go here, Surviving a Falling Stock Market, August 20. Go to Large Caps We Like, August 19. Go to this class just to learn what meme mania means, June 4. Know this before quitting stocks, May 12. Learn that, how capitulation opportunities happen. Of course, you want to know how to keep selling extensions, why we knew about March being toppish. Learn peso cost, dollar cost averaging. Learn this, May 29. Go back to this class, the $8 million janitor. These are my favorite classes. Understanding the NASDAQ bubbles, the similarities to today's market histories, and what to do in retarded markets. Pigs get slaughtered, March 12th. So all the bearish divergences explained. So for 2022, I hope you review all of those classes that I really loved. And I'm wishing you a very great holiday for the new year. And see you again, 2022. That ends the year, and I hope that you've got a good year. And even if it's not a good year, you'll see that in 2022, you'll have to navigate a choppy, bearish market. Thank you, and that's it. Okay.